DPLO is yet another Namibian developer. We've heard from a few this morning, Bannerman and Paladin. So Namibia, obviously a great destination for potential uranium producers, a country that's been producing and shipping uranium for over 40 years, and obviously very heavy Chinese investment in that area. So, Andrew, we've got obviously that project. You've also got Mulga Rock in WA, one of the few grandfathered projects that will be able to be in production despite the current WA mining ban. So, pass over to you. Take us through the DYL story.
Okay, I'll just get you the slide.
There we go. We can see that. Yep, that's great. Thanks.
Okay, thanks for having me, Andrew. And thank you to Shoring Partners for getting DPLO on the list. We just so where are we? Okay. Firstly, we believe we have the right assets and team at the right time to capitalise on what is the uranium industry poised to benefit from materially high uranium prices. We're advancing 2 Tier 1 mining projects in Tier 1 mining jurisdictions. These will be developed sequentially. First with Tumas project in Namibia, immediately followed by the Mulga Rock project in WA. In a market also where there's limited greenfield uranium projects ready to go, we have the Tumas project having completed a robust DFS and ready to hit FID when the uranium market, both from a contracting activity perspective and price, reaches a level supportive of greenfield development. The company recently appointed Greg Field as the MD and CEO. Greg brings a tremendous amount of execution capabilities to the team with strong construction and operational experience across a myriad of projects. One aspect which differentiates DPLO from many of its peers is the longevity and development pipeline. Tumas currently has a 30-year life of mine. We believe Mulga Rock can also achieve a 30-year life of mine, and we have a pipeline of assets that will see us producing for many decades to come. Lastly, we see DPLO in a strong position to capitalise on the strong uranium thematic, and more so given that we haven't signed an offtake agreement yet. Okay, so just onto our showing our globally diversification. Our flagship Tumas project is located in Namibia, some 80 kilometres away from the Walvis Bay port, one of the few Class 7 ports on the west coast of Africa able to export uranium. This is a calcrete deposit, very similar to the Langer Heinrich deposit, something the team has a lot of experience with. Adjacent to this is the Omahola project with £125 million resource. There's a Rossing basement type deposit with a 35-kilometre prospective zone currently being pursued. I should highlight these are 2 very large long life assets, basically a rarity in today's market. In Australia, we have the Mulga Rock project located 290 kilometres northeast of Kalgoorlie, just off the Tropicana Haul Road. But more importantly, as you just highlighted, this is the only project in WA with a granted mining lease. We also have the Alligator River project, an unconformity-related deposit located 380 kilometres east-northeast of Darwin. This is a very large land holding over some highly prospective ground, covering a total of area of 3,895 kilometres. Lastly, we have one of the largest resources on the ASX, and if not globally, at £430 million. At DPLO, we strongly believe the assets above ground are just as important as the assets below ground, and we believe the DPLO team is best in class. Chris Salisbury, just at the top left, our chairman, previously led senior operational roles at both Rossing and Ranger uranium mines. Greg Field, as highlighted earlier, strong execution capabilities and operational skill set. And more recently, we appointed Zebra Cassetti as Managing Director in Namibia. Zebra has over 35 years mining experience, 25 years at Rio. He started as the metallurgist at Rossing. He's also led the Chamber of Mines in Namibia, a great asset to have in country. As you can see from the rest of the team, the majority of us are ex-Paladin with a long history of developing greenfield uranium projects. And importantly, we've learned the lessons over the years and again have got some battle scars. And I think it's that experience again which differentiates us from many of our peers. Quick snapshot of the capital structure. Market cap of late, 1.7 billion. Cash in the bank as at 31 December, 187 million. Sprott and Paradise, our largest shareholders, and well covered, well supported from a coverage perspective. Okay, Tumis, our flagship project, is targeting £3.6 million per annum. We completed a DFS in April of last year. It came up with an NPV of $577 million and an IRR of 19%. I should also note that that DFS was done at a uranium price, as you can see at the top there, $82.50 a pound, whilst the current term price is now $90 a pound. Project CapEx, $474 million US. This was a real number, so we will see some inflationary impact on this number once we announce FID, and an all-in sustaining cost of $45 a pound. Project has an 80 million reserve with a 30-year life of mine. However, we still have 30 million pounds of inferred resource available, which typically converts to indicated at plus 90%, and also 25% of the deposit still remains untested. So there's a real potential capacity to go well beyond the 30 years. This is a calcrete deposit, as I said earlier, very similar to the Langer Heinrich. Our technical team was involved in the development of the Langer Heinrich flow sheet and the operations, and have subsequently used those learnings to improve the flow sheet for Tumis. The biggest difference between the two plants is we are using membrane technology to concentrate the PLS rather than the ion exchange used at Langer. That membrane technology also allows us to recycle the reagents, separate the vanadium, and produce a benign tailings dam. That is basically walk away, which will be a world first. Okay, we delayed FID back in April of last year. The rationale for that was simple. At that point in time, we did not believe the uranium market supported the development of a greenfield project. And what I mean by this is the level of contracting being executed in the market was and still is well below our replacement levels of circa 150 to 180 million pounds per annum. And until such time that those contracting terms or the contracting conditions improve and we can get better terms and conditions, both from a payment terms as well as market-related exposure, we will not press the button on FID. And to be clear, we've obviously just seen this term price increase from $80 to $90 over the past year, but long-term contracting levels still remain historically low. I think furthermore, given the Iran war and what's happening over there and the market volatility on a daily basis, both from a cost of capital perspective and the cost of every input going into an operation as well as construction is likely to defer any sort of near-term future FID decision. But that's fine. Look, as I've sort of said, we've got $187 million in the bank, and it's a long glide path before we need to make an FID decision. Beyond this, as I said, the project is progressing well. Nedbank is our mandated lead arranger on the project financing. Their independent technical expert completed the report on the Tumis project late last year with no fatal flaws, giving the project financing a green light. We continue to engage with off-takers. The aim here is to ensure contracts entered into provide shareholders with the maximum exposure to uranium price upside. So that, what I mean is moving away from the more traditional fixed price-based escalated term prices and more into the market related with a floor and a ceiling, and God forbid, maybe just a floor as well. I'll also say that we're now taking a truly global approach to our marketing efforts rather than what was previously probably a more US-centric approach. We continue to de-risk the project. From a technical perspective, detailed engineering is greater than 65%. More than 70% of the major equipment has been tendered. Bulk earthworks are greater than 65% complete and looking to be finalised by the end of April. And with regards to infrastructure, we have power agreement executed with NAM Power. We're close to finalising a water agreement with NAM Power. Okay, here are a couple of pics of the groundworks out at site. Top left-hand corner is the primary mill area. Top right-hand corner is the groundworks for the secondary mill. Bottom left is the CCD area, and bottom right is the leach area. As I said, these groundworks should be finished by the end of April, with a decision to be made shortly on the civils or the concrete, which would again significantly de-risk the project and further from any scheduling delays. Oops. Okay, Mulga Rock is our other advanced uranium project. As I said earlier, it is the only uranium project in WA with a granted mining lease. Hence, we could essentially start construction tomorrow if we were ready. It is a large resource, 105 million pounds. There was a DFS completed on the project years ago. However, our technical team is now undertaking a revised study with a focus on extracting as much as we possibly can out of that deposit. And what do I mean by this? Basically maximising the recoveries of the base metals, nickel, cobalt, copper and zinc, as well as we're now recovering the rare earths, Nd, Pr, Dy and Tb. The recent focus at the pilot plant has been on the metallurgical test work to optimise the flow sheet. We have been trialling a new chloride-resistant resin in RIP and in leach, the results of which have been we're achieving high recoveries. It also means we're able to use the in-pit water rather than fresh water, and that is rather than having to pipeline via a 30-kilometre pipeline fresh water. We can now use the water in pit. It makes a big difference too from a cost perspective, as well as it also significantly reduces our environmental footprint. These resins have been a game changer. We're now getting better recoveries in uranium, recoveries of 80 to 90% in the base metals, and getting increased recoveries on the rare earths. And the beauty of this is these byproducts will potentially provide a material offset to the cost of producing uranium. Okay, this slide just illustrates how we will sequentially develop each project on the pathway to plus £7 million per annum. First, we've developed the Tumis project, and once the Tumis project begins commissioning, we start construction of the Mulga Rock project. Once Mulga Rock commences commissioning, the aim will be then to sequentially develop the next project, be it organic or inorganic. So hypothetically, if we pulled the trigger on Tumis tomorrow, we could potentially be producing plus £7 million by 2032. As I mentioned earlier, both Alligator and Omahola are a part of our exploration pipeline, which can in time potentially add new projects organically to the Deep Yellow development pipeline. Alligator River, located in Elephant Country in the Northern Territory. Once that flooding dissipates up in the Northern Territory, our team will be up there to commence the next drilling program. And Omahola, a Rossing basement type deposit, potentially providing another mine in Namibia when time permits. I just want to touch on how I believe our disciplined approach to date has translated into shareholder value. Firstly, from supply discipline, we have not brought pounds into the market before they are needed. We have waited for that structural deficit to become more visible to the market, which I believe it has. Offtake discipline, we have not contracted at lower prices, giving away the upside. We've waited for uranium prices to go higher and contracting terms to improve, which I believe they have. And we've maintained discipline with regards to our funding approach. By not implementing offtake agreements at lower prices, it means we can now contract less at higher prices. We've maintained discipline development approach to bringing pounds to market. That is, we're taking this phased approach, one project after the next, and we will have a disciplined approach to production, not flooding the market or front-running demand over a short period of time, but taking a multi-decade approach. And I believe all of these factors have placed us in a stronger position today, more so than 12 months ago. So in closing, Deep Yellow has 2 advanced long-life uranium assets in Tier 1 mining jurisdictions and a highly prospective exploration pipeline. We have near-term production available from Tumis, subject to FID, which continues to be de-risked, and we have the right team to deliver on this strategy and maximise shareholder value in what is an incredible time to be involved in the uranium market. And with that, I'll take any questions you may have, Andrew.
Yeah, thanks, Andrew. Yeah, great overview. Well done getting through